Let's talk about tech stocks. The engine of our modern world, full of these incredible innovations and, let's be honest, some legendary companies. For investors, this is where you can find some really amazing returns. But it's also super fast-moving, it's volatile, and that can be pretty daunting if you're just starting out. Okay, so let's just dive right in and build a clear framework for how to navigate this whole world.
So why is everyone so excited about tech? Well, this chart right here tells the whole story. I mean, just look at it. Over the last 7 years or so, the tech sector has just delivered these mind-blowing returns, completely dwarfing the rest of the market, even the S&P 500, which did pretty well on its own. That huge gap, that outperformance, that's the allure. It's exactly why so many of us are drawn to this space, hoping to catch that next big wave.
And when we talk about the tech sector, a lot of the time we're really talking about these guys, the Magnificent Seven. We're talking Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. I mean, these are household names, right? They've become the absolute backbone of the stock market. And get this, as of recently, just these 7 companies made up nearly a third of the entire value of the S&P 500. So when they move, they don't just move the tech sector, they move the entire economy.
Okay, but with all of that incredible growth potential, we got to have a little reality check. The very things that make tech so exciting, all that innovation and disruption, are the same things that create a ton of volatility and risk. So it's absolutely crucial to understand both sides of the coin before you even think about investing.
This is the question, right? It's what every new investor is thinking. If the returns are that good, there has to be a catch. And the truth is, yeah, investing in individual tech stocks isn't some guaranteed ticket to getting rich. There are some very specific challenges and risks you really need to know about.
And hey, then just take my word for it. Listen to certified financial planner Lawrence Sprung. He basically says that trying to pick the next big winner is incredibly hard, even for the pros who do this for a living. What's revolutionary today could be totally obsolete tomorrow. It just goes to show you how risky it is to bet on a single company.
So let's actually break down those risks. First off, you've got intense competition. Today's market leader can get knocked off its perch almost overnight by some new kid on the block. Then there's the high market volatility. Tech stock prices can swing like crazy on a single news headline. On top of that, we're seeing more and more government regulation around things like data privacy and antitrust laws. And finally, there are real environmental concerns, from the massive energy use of data centers to the growing problem of e-waste.
All right, now that we're clear on the risks, let's get practical. How do you actually figure out if a tech company is a good investment? We're going to build a little toolkit to help you look past all the hype and really analyze the fundamentals, just like a pro would.
And this quote from Jordan Gilberti just hits the nail on the head. It is so easy to get caught up in the excitement of a cool new product or a stock price that's just shooting for the moon. But smart investing means grounding that excitement in some solid, boring research. You just can't let the thrill of it all make you skip your homework.
First up in our toolkit, liquidity. Now that sounds fancy, but all it really means is, can the company pay its bills for the next year? Think of it like this. Do they have enough cash on hand to cover their immediate expenses? In the tech world, things change fast, so a company needs cash to be able to pivot. Strong liquidity is a fantastic sign of stability.
Next up is solvency. This one is all about the long game. Can the company meet its financial obligations for years and years to come? Now, a lot of tech companies take on debt to grow, and that's not necessarily a bad thing. But, and this is a big but, you want to make sure that debt is manageable. You want to see that they can sustain it for the long haul. So, let's put this all together in a super simple 4-step framework. Step 1, review the key metrics. We're talking revenue growth, profitability, maybe even things like monthly active users. Step 2, check that short-term liquidity. Can they pay their bills right now? Step 3, assess the long-term solvency. Is their debt under control? And step 4, and this might be the most important one, study the leadership. A strong CEO with a clear vision can make all the difference. Okay, so you know how to analyze a company. Great. Now let's zoom out a bit and see how this all fits into your bigger personal investment strategy. Because remember, just picking one stock isn't a strategy. It's just one tiny piece of a much larger puzzle.
Now, take a look at this. This is a sample of what a diversified portfolio might look like. And what's really interesting here is notice how small that slice for individual tech stocks is. The vast majority is in broader stuff, like index funds, and more stable things, like bonds. This is how you get a taste of tech's amazing growth without, putting all your eggs in one very volatile basket.
And I really want to hammer this point home because it's so important. Piling into just a few popular tech stocks is probably one of the biggest mistakes new investors make. Diversification is your best friend here.
It's your protection. It's like having a plan B, a plan C, and a plan D for your money.
And beyond all the numbers and the charts, there's the mental game. The tech sector is noisy. There are constant headlines, wild price swings, and it is so tempting to react emotionally. Buy when everyone's hyped up and sell when everyone's panicking. But as this quote reminds us, real success comes from having the emotional discipline to just stick to your plan and tune out all that noise.
All right, for our last section, we're going to do something a little bit ironic. We're going to use the innovations from the tech sector itself to become smarter investors in that sector. It's all about using technology to give yourself an edge.
I mean, think about the tools we have access to today. It's incredible. You've got robo-advisors that can build and manage a diversified portfolio for you, basically on autopilot. You have tools that automatically rebalance your portfolio, take the emotion out of it. There are even AI-managed funds and news alerts that bring information right to your phone. These tools can make managing your investments way more efficient than ever before.
So there you have it. You get the allure, you understand the risks, and now you have the tools for both analysis and strategy. You've got a framework to approach tech investing with confidence. Technology is all about building the future. The only real question left is, what part of that future are you going to choose to invest in?